The crypto market has been going through a strong bull run in the last few weeks, in particular, seeing some big names such as Bitcoin being rumored to hit its previous all-time high of $60,000 in the coming few months. But the real question still remains, will this surge last? After March and April, when cryptos saw the coins hit all-time highs and then crash land and wipe out nearly 40% in total value, the market was pretty skeptical. People were quickly cashing out and making a loss on the same currency they thought could make them millionaires. But what is the case with any financial instrument in the world? Patience is king. After the last few months picked up pace and tried to recover from the big losses of the market, the last month or so has seen a very strong bull market pattern emerge. Ethereum, Cardano, and Bitcoin in particular are the biggest beneficiaries in this stewing pot of online wealth. But the others aren't far behind and are catching up too. Bitcoin has been considered to be going through a strong recuperation lately. After it smashed under $30,000 in July, it has thundered back through August. The Bitcoin cost up to 40% on this time last month, is edging nearly to the mental $50,000 per Bitcoin level, helped on by taking off the cost of Ethereum, Cardano, Binance's BNB, Ripple's XRP, and the image-based Dogecoin. Indeed, as the costs of all the cryptos took off greatly, the joint crypto market cap has pushed more than $2 trillion, interestingly, since May of this current year. Some Bitcoin and crypto financial backers are, in any event, feeling sure that the Bitcoin cost could surpass everything's time high of $60,000 and head for the $100,000 mark. As per Mike McGloney, who is a Bloomberg Knowledge senior item tactician, he has high expectations for the crypto coin that began everything. He says that Bitcoin has still got a lot of space to get the old high. On the off chance that Bitcoin simply follows Ethereum, it will draw near $100,000. Ethereum, the second biggest cryptographic money by esteem, has outplaced Bitcoin this year, with its ascent fueled by significant overhauls, the flourishing decentralized money DeFi market, and the NFT frenzy. With both DeFi, which tries to reproduce customary financing without the requirement for banks, and NFTs, an extraordinary advanced crypto tokens attached to online media, predominantly dependent on Ethereum. As is known as of late, Bitcoin did face major scrutiny in regard to their unsustainable properties and uses of non-renewable energies such as coal and other fossil fuels to mine for Bitcoin. In fact, this is one of the major reasons why altcoins like Ripple's XRP and Cardano have been gaining more popularity due to saved transaction time as well. One big hit Bitcoin took was in April of this year when the infamous Elon Musk stated that his company Tesla would not be accepting Bitcoin for transactional purposes due to their environmentally damaging properties. This was true the time where small coins truly started enjoying a bigger piece of the pie and gave Bitcoin a run for their money. No wonder the second largest coin in the crypto space has been outperforming Bitcoin in 2021 itself and is on its way to get bigger and bigger as the year goes on. Ethereum has climbed 70% this last month alone, while BNB is up 30%. Cardano is up 65%. Dogecoin is up half, and XRP has multiplied. After gigantic Ethereum, Cardano, BNB, XRP, and Dogecoin rallies, some expect Bitcoin to start to make gains. Yet in spite of the natural difficulties and challenges this has made, Bitcoin is as yet running solid. Bitcoin seems to have assembled a base around $30,000. That is likened to $4,000 toward the beginning of 2019, and we see execution matches that could get the benchmark crypto in the groove again toward $100,000. McGlone wrote for the current month in his August report. With Bitcoin crossing above its average price over the last 200 days, we think Bitcoin will rally strongly into year-end, Lee wrote in a note that was first reported by CNBC. But others feel like the future of Bitcoin may not be so bright. David Russell, vice president for market intelligence at TradeStation, has warned that Bitcoin may pause after its rally off its July lows. Bitcoin's near the same level below, which sellers get aggressive in mid-May, Russell said in emailed statements. This is the most significant resistant area Bitcoin has yet faced in the current rebound. We believe that the market should take a breather here, the chief executive of crypto derivatives exchange Delta, Pankaj Balani, said in an email. Balani predicts the Bitcoin cost will move more than the $50,000 level in late August or early September. A total separation over that ought to draw in new streams and convey a solid message that the market remedy may have finished. Some others have clarified that Bitcoin has been shaping something of a customary example with its plunges and rises. Ryan Haar from Next Council exhorts individuals about the failing costs and examples of Bitcoin. The cost of Bitcoin last plunged beneath $30,000 in July to $29,514, almost 1 month after it dropped to $29,031 in late June, the first occasion when it had gone that low since January. These drops, following a high of more than $60,000 in April, highlight the advanced money's insecurity when a steadily expanding number of people are excited about getting in on the movement. In this week, since the most recent July discouraged spot, Bitcoin has risen reliably with a couple of step-by-step highs above $40,000. Again, Bitcoin is incredibly shaky, so these high focuses are depressed spots are not all awful. We've spoken with contributing trained professionals and money-related directors who illuminate against sinking a ton in regards to your portfolio into the asset class for this very clarification. They work with clients to guarantee eccentric crypto adventures aren't upsetting other money-related requirements, for example, saving a blustery day record and dealing with excessive premium commitment. You have a high chance of losing it all, but a small chance of winning it big, says Nate Neary, a CFP with Modern Money Management in San Diego, California. Don't gamble an amount that would burden your family or prevent you from achieving your goals if you lost it all, he says. But experts claim that this kind of dip is normal for those who invest in crypto for the long term using a buy and hold strategy. Swings like this are to be expected. The recent dips are nothing to be overly worried about, according to Humphrey Yang, the personal finance expert behind Humphrey Talks, who says he avoids checking his own investments during volatile market dips. I've been through the 2017 cycle too, Yang says, referencing the crypto crash of 2017 that saw many major cryptocurrencies, including Bitcoin, lose major value. I know that these things are super volatile. Like some days they can go down 80%. Experts recommend keeping your cryptocurrency investments to under 5% of your portfolio. If you've done that, then don't stress about the swings, because they're going to keep happening, according to Bill Noble, chief technical analyst at Token Metrics, a cryptocurrency analytics platform. Volatility is as old as the hills, and it is not going anywhere, Noble says. It's something you have to deal with. As long as your crypto investments don't stand in the way of your other financial goals and you're only put in what you're ultimately okay with losing, Yang recommends using the same strategy that works for all long-term investments. Set it and forget it. If this type of extreme drop bothers you, you may have too much riding on your crypto investments. You should only invest what you're okay losing. But even if the drop is making you rethink your crypto allocations, the same advice still stands. Don't act rashly or upend your strategy too quickly. Reconsider what you might be more comfortable with going forward, such as allocating less crypto in the future or diversifying through crypto-related stocks and blockchain funds rather than directly buying crypto, though you should still expect volatility when crypto markets fluctuate. Some other noteworthy examples are also Dogecoin. The infamous Dogecoin soared all the way to 70 cents in March before dropping nearly half in valuation. With Dogecoin in particular, the market is of the belief that this is nothing more than a meme coin. Still trading at around 40 cents as of this writing, the coin has a lot of backing from not actual financial players, but from mega billionaires like Elon Musk and Mark Cuban, who may just be trying to manipulate the market for their own gains. In fact, Elon was believed to do the same when he repeated tweets on Doge, saw the market drop and rise rapidly according to his tweets. These kinds of altcoins are pretty high risk and unpredictable, but the market believes that in the long run, many one-off coins would not survive and would perish away slowly but steadily. All we can do is wait and watch and hope that everybody gets the steady profits that they are looking for, since the crypto space is nothing short of dynamic and unpredictable. That is all for now. We shall catch you in the next one.